being here, as always. It's been great talking to you, and I'm glad to be back. It's good to see you guys. Have a good one. I'll see you all very soon. Stay safe.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. How we doing? Happy Wednesday. Welcome back. It's got a couple trades running this morning on some SPX. This is the day before non-farm payroll, so let's see what the market's feeling. 6,200 like yesterday, still pretty sticky. Doesn't necessarily mean to just hang out at 6,200, but this is by far my largest liquidity level, gamma level today. There's a lot of noise. Here's a good way to see it. There's a lot of noise around these current levels. So probably just a lot of premium selling going on right now. Maybe the outlier would be non-farm payroll. Tomorrow morning, let's take a look at the calendar. Let's go to this week. So Thursday, non-farm, we're looking at 240,000. Nope, that's unemployment claims. Sorry. So we're looking at non-farm numbers, 111,000. What would be a good miss, or I'm sorry, what would be a good number? What would be a bad number? I'd say anything under 100,000 is probably seen as a bit of a miss. It's going to potentially still spark concerns of a softening labor market. Average hourly earnings have been steady, but the unemployment claims have been sneaking higher. If you take a look at this on the chart side, let's go out a little bit. It's been steady. The one thing, it's not really the unemployment claims, it's the continued that I think is maybe the bigger concern. Okay, it's hanging on to a couple levels here. So let me take a quick peek here. So we go initial. So I've got the initial jobless claims at 236K. There's two levels that I watch. This one is still pretty well contained. So this is initial jobless claims. It's the continuing jobless claims that I think might be the bigger, more important number to watch for non-farm tomorrow. Is this one isn't trending, right? Like since 2022, it's been about the same. It's the continuing jobless claims that we're starting to notice is ticking higher. So this one has been trending higher since summer of 2022 and continuing to go up. This is not a good sign. Okay. So even if we do have, solid positive number tomorrow, over 100 grand is fine. Like 100,000 jobs is fine. I think under 100,000 will start to maybe show a crack in the labor market, start to show some headlines that are showing concerns. Interesting headlines yesterday. Trump says he's not going to extend the deadline for July 9. So apparently our official 90-day pause is July 9, right? Our pause is July 9. When that pause is done, what happens? Are we going to force the world to pay tariffs? Are we going to, up the, I don't know. That's like nobody freaking knows. Like all we know is that the market just got a breather for 90 days. And here we are July 9th, which is next week. What does it all mean? I don't know. I don't think tariffs is as important as it was, April, like end of March, early April, when it was all happening Liberation Day onwards. But that pivot on the 9th showed like, okay, the U.S. isn't really trying to put on a global trade war. It's trying to do something with trading more and encouraging some trade, whatever. Point is, there's still some cracks. The market doesn't seem to care. I mean, if you look at what this market has shrugged off, the only thing that's really going to change, in my opinion, to change the trajectory of this market is going to be earnings season, which is still about 2 to 3 weeks away. When we start to heat up with all the financials, then your MAG7s, earnings has to be pretty darn good, because if it's not, it's going to be easy for this market to start contracting and compressing, and we see a little bit of earnings compression if that's the case, or the only companies that are making money are the cream of the crop, like your top 10, top 20, top 30 stocks or something like that that are carrying the broader market. Health wise, I mean, I think it's S5 FI. Yep. So above the 50-day, look at this thing. Like this is today. So we have some decent market breadth this morning. I mean, the market's pushed from 67% of stocks above the 50-day now to over almost 80%. This is the S&P 500. 80% of stocks are above the 50-day moving average. Okay, look at this surge. This is today, a big jump in stocks. I mean, I was getting alarms yesterday on stocks that I haven't watched in a while. That Snap was up, Pfizer was up. There were some, definitely some beat up stocks. All right, that's good. Let's get out of this one here. Okay. Just got to keep an eye on one thing today. I'm going to put in another trade. So if I go there, there. Okay. Keep an eye on that for the day. All right, give me 1 second. Okay, so market breadth, getting a nice little surge on the 200-day. So we are seeing another push. This isn't a huge surprise considering this time of the year. July is usually a pretty bullish month, and a lot of that happens this like first week of July. We kind of come off of if we're recovering into June, or this June was just an additional melt up. July tends to kind of pick up and continue that momentum. It's pure summer trading for the most part. Path of least resistance. It's a holiday, so this week we'll see it. Like Thursday, the market closes at 1. No trading on Friday. Markets are closed, right? But we're getting, a nice little surge in market breadth. Like I said, I saw stocks yesterday that were up that I haven't seen pop in a while. Let's go to FinViz. We have about that's surprising actually. I thought we'd have more. Shows only about 45% of stocks advancing versus 47.8% declining. You're getting a big lead here by some big boys. You got Tesla leading the way with a big gap up. You got Apple up as well. NVIDIA up a little bit. AVGO up a little bit. Let's take a look at this heat map a little bit more in detail. So you got some software stocks down. Adobe is down. Okay. Healthcare plans, UNH down. I still have a ratio spread on UNH at like the 260 level. Okay. We got a lot of like lows and flats on the day. We'll see where things go. And I'm going to try to get 62.10. Are we drifting up to maybe a ceiling today? 15, 20, 25. I'm looking to do a sell trade up here. Okay, I'm going to get a couple sell trades running. So 62. See if I get a 20 and 25. Maybe the 25, 35. Okay, sprinkling a little bit of a wall there. I go 20 to 30. That one's an overlap. I can't go 20, 30. I'm going to go 25 to 35. Try a little overlap. All right. So stocks that I saw pop yesterday. Snapchat on a rip. I actually closed out. So I did some maintenance yesterday. And these are some updates you should be aware of. I did this in Pulver alerts. So some trades, if you're in on some of my Pulver alerts with some of these campaign trades, I own shares of Intel. I'm rolling calls. I'm making income on this. Snapchat, I actually removed the covered call for a loss, and I'm letting the stock run. This one at some decent lows. I think Snap has the chance to get up to. I mean, I'd be happy at like 12.90, but there's room to get up here to these levels around like $15, $16. I'd love to see a big fat squeeze on Snapchat to the upside and run this thing for my break even price is like $8. So $8 to 16, I'd be pretty happy with that trade. But if it gets up to $12.90 to $13, I'd still be happy with that just to cut it off early. But I've got a limit set at $15. So I'm in the trade. I'm not trying to sell calls right now. If I'm going to sell calls, it's going to be something in the money. If price is already up at a price I'm willing to accept, then that's the trade. Like I want to just take the run to like $15, $16 before I close the shares. JD, I rolled some calls on this one to decrease my cost basis. TLT, I added another leg to my diagonal. IWM, I rolled shares out and up, so I increased my profit by another $2.05. Tesla, I've got different accounts with different levels, but on most of my accounts, I ended up increasing my profit by $710. And on one account, I did $11.30 or $1,130. So just some active management on some of the core positions. But we saw, a move like Pfizer yesterday. Pfizer at 25 and change. I tried to go out here and say, you know what? I think I'm going to sell a call in Pfizer. I'm not going to. Like the premiums are so bad, and this stock is so beat up with tons and tons of divergence in oversold conditions. I'm like, look, Pfizer, just give us a squeeze. If Pfizer gives us a little bit of a squeeze, we get above this trend line for the first time in months. Do we have a squeeze on Pfizer up into the 30s? Right? We get to 30, 31, 32. I mean, my break even on Pfizer is like $24. So I don't need to hang on to this thing forever. But if we get a run up into some resistance, that's a pretty good spot. I would probably just take profit. And if it comes back down, I'll reload and I'll do it again. I'll do it again because this is probably going to take time to bottom out. I don't think we just go down on Pfizer, V bottom, and go up. It's not that type of stock. This is the type of stock that if it stops the bleeding, it goes up and it goes down, it goes up, it goes down. And this is going to be the accumulation phase that you're going to have bigger money that's going to be invested in. And then the value is going to be, okay, hey, this fair market value is $35 or $40. And so it's a value play at that point. And big money institutions would be accumulating. All of a sudden we have a run and a rip into those price levels. And then that's when it gets dumped and I'm not going to chase it. I'm going to be in it. So if we get out at like $30, $31, that's safely out. I don't have to beg this thing to do anything. I take profit and then I can reload at lows again or position with ratio spreads or some fancy options trades to say, look, I'll own it at $24 again. But if not, I'll take income. And if it goes up higher, I'll just keep the income. But if I load it back up, I, buy, take profit, buy it again, take profit, buy it again, take profit. We can just range trade this thing. That's the type of stock that it is, in my opinion. We're going to have a bigger bottom, and we're just going to get a range trade for maybe several months. So, but the premiums are just not great. That's why even though we're up from the lows at 21, this is like a pretty big move. It's 21% off the lows. Most of the time I get excited about that, but the premiums are so bad, I'm just not touching it. Okay. All right. So let's see what we get. There's some moves on the day. That was yesterday. Getting some direction right now. 62.15, 62.20, 62.25. Those are my ceilings for the day. Center price around 6,200. I've got a trade in that's benefiting from that move. So right now, I've got about $30, $40 on that trade running. Okay. What else? Let's go top down. I do have a hard stop today just before 11 o'clock, just so you know. So I'm going to try to get through all the top down stuff. I know yesterday we kind of talked strategy. I don't know if it was ratio spread. It might have been ratio spread. But anyway, I'll stick to kind of core stuff. Let's go currency strength for the morning. Dollar's catching a bit of a bid. Pound got hit really hard this morning around 8 o'clock a.m. Eastern time. So we have dollar and CAD on top together. Swiss just below that. Euro, yen, Aussie, New Zealand a little bit softer. My Aussie New Zealand longs are still looking pretty good. Aussie CAD's finally getting a pullback. Let's check some currencies. Let's go dollar index. As I said these last several weeks, I mean, everyone's like, what do we do on the dollar? I've been telling traders, don't short the dollar. This is symmetry. This is technical like bounce level. This is a potential oversold and divergent trade with a lot of crowded. Everyone's talking sell the dollar. Okay. I don't want to be positioned like that. So I think if anything, this dollar can retrace and then we look for another leg of selling. All right. So I don't really want to touch the dollar until it's back up to 100 or maybe 102. And then I'll look for confirmation to start looking to sell high, stop loss above a turn, and then take it down to fresh lows. I think 90 is a great spot. If we take the DXY down to 90 from another 100, 101 handle, that's a great trade. And we can position obviously on all of our currency pairs for that move. Okay, that makes sense. So I'm not long the dollar. I'm not like I'm just going to be waiting for some pullbacks here. But euro dollar, if we start to break this trend line, okay, we start to break that trend line, then possibly a little sell, stop loss above the turn, see if the euro dollar comes back down to some structure, maybe 112, maybe 111. Probably 112 is safe. But I want confirmation. Pound dollar, turning hard, still hasn't broken this trend line. If we put in a topping pattern, if the pound dollar sweeps this low, let's say we put in a topping pattern, pull back, there's a good swing trade on the pound. Right? Take out the low, pull back to like a 5-0, stop loss above. You can, sell one, sell two, stop loss above that, and then swing from trend line to trend line. Let's go Aussie dollar. Aussie dollar, we had a pullback towards around 63.60, 63.70. If we pull back to there again, I think we pull back to there again. I like this area as a potential long, but it'd be area 1 and area 2 to get long. Okay, and then looking for a bigger swing to open space like 67 to 6,800. New Zealand dollar, same thing. We pull back to like 5,900, 58.50. Area 1, and I'd say area 2. Stop loss to be below this low. So area 1, area 2, still looking to trade back up to highs or open space back up towards like 63, 63.50, all the way up here. 63.70 of those highs. Okay, and look, if I don't get the pullback that I want, if this is just going to make a pullback, a pullback, a pullback, a pullback, a pullback like that, I'm probably not going to get much of the trade that I want, unfortunately. And that's okay. I've got to be okay with that. But I'm hoping we get a decent equal level to pull back. Okay, let's go top down from Aussie CAD. Aussie CAD, I'm still long Aussie CAD. I'm looking for a pullback into this 382 to 618 zone. Aussie Swiss, I think this is the next leg for me is just wait. Wait for a trend line break, see if this is a low, high, higher low to then get a push into the 200 moving average, or is this, which I've been experiencing now for like 2 years, which is we make a low, we pull back, we still slowly go all the way back down to the lows, and then we hit the lows and we have like a range trade. Maybe it's a range trade. Maybe this is a double bottom that finally starts to go the other way. I don't know yet, but I'm still holding. Okay, Aussie yen, nothing. Aussie New Zealand. I'm long Aussie New Zealand. I want to get more long. I want to stack in more trades. 106. If we get it, I just have an order like it. 10. I think 110 and 108 are my two levels on Aussie, New Zealand. I'm trying to get back to the highs at 112. I'd like to get back to the highs at 114. I don't know if I'm going to hang on to it that long. So 110, 108, trying to get back to 112 or so. Aussie dollar we just did. CAD Swiss at some fresh lows. Hopefully this thing's ready to make a turn. This trend line just has to break. I mean, honestly, the patient side of the CAD Swiss is, do we get this stupid currency? And a currency like this, it's surprising that this thing is down. I mean, this is down 2,000 pips. The CAD Swiss of all currency pairs is down 2,000 pips. What the fudge? You know, that's crazy. So if it ever decides to turn, do we have a high and a low that gets back to equilibrium? The equilibrium is probably around this like 68 to 6,900 zone. It's going to take time. Like we'd have to put in, you'd probably see a pretty obvious bullish pattern. You'd see some wave structure in here, but I would just go high, low, and try to find the 50% zone. And that'd be a great profit target. You know, there's still pockets way back here. There's still pockets way back here. There's still pockets way back here. All these need to be hit at some point. It's just a matter of when does this thing stop going down. CAD yen, no trade. Swiss yen, not interested unless this thing turns really hard. We have to turn really hard at these tops. Euro Aussie, no trade. Euro CAD, I didn't call the top. I was looking at selling it, you know, at equal highs. I didn't. We had some wonky stuff going on with the oil, so I stayed out of it, which I'm kind of glad that I did. But I don't know. I mean, if it somehow like comes back down here, maybe there's a swing. It's just not my favorite. I'm going to say Euro CAD, Pound CAD a little tricky right now. Euro Swiss, I'm still long. Going to hang on to longs. Euro Pound, this thing's nuts. I can't believe how much Euro Pound is moving. Like this is a lot of direction that we haven't seen in literally years. And this Euro Pound has come alive in a pretty interesting way. Most edits have a robot trading it, but still. Euro New Zealand, Euro Yen's cleared some resistance. I mean, maybe a run up into this area. So 173 to 175. If that's resistance, I mean, that to me looks like a pretty good short. Low risk, potentially massive reward. If the trade works, it's a great trade. Obviously, I want to have a stop loss plan though. Euro New Zealand, no trade. Euro dollar, I wouldn't short this thing until the dollar actually breaks. We'd have to see that. Got to break that trend line first. Have to see a nice little topping pattern. Pound Aussie, leave it alone. Pound CAD, turning nicely. That's mostly the pound today, but we're selling that resistance around 8,800 worked out pretty nicely. Pound Swiss, want to see what the bottom does. I mean, that's a big drop. It's pretty inefficient. Maybe we have a nice double bottom here at 107. Just stay small. I still think it's a good trade. You know, I mean, 106, it's like, okay, you've got 106, but you've got intervention levels at 102. I mean, if I'm willing to trade very small, be conscious of the margin here, but if it was buy the low at 107 or 106, and then a 104, and then a 102, if this falls very inefficiently, that would be an easy 1, 2, 3 to test this area and then see this thing pop back up and find these pockets and inefficiencies, and you take it back to like 110. Initially, the profit target was around 1350. I would modify that if I'm getting in lower levels. I would modify it, take profit, and have multiple winners here at like a 110 handle. Okay, pound yen, nothing. If you're scalping, maybe pound New Zealand, no. Pound dollar turning, just not breaking the trend line yet. New Zealand CAD turning. I'm still waiting to see if we get a pullback towards like the 50618 zone. New Zealand Swiss. I'm waiting. We have a pretty decent bar count on this one. Lots of pockets. Maybe a double bottom at 46. Just I don't know. I'm being patient. I'll hold whatever. New Zealand yen, nothing. New Zealand dollar. If we get a pullback, great. Otherwise, it could be this. A range trade. Maybe a range trade. Right? We'll see. Dollar CAD, nothing yet. 34, 33, 3,200, maybe buying in there. Otherwise, wait for the trend line to break. Dollar Swiss has breached the lows. I mean, there's 8,000. We're down by about 100 pips below that. I'm just cautious. Like this to me is divergence. This to me is divergence where we have lower lows in price, disagreement in momentum, relative strength is oversold. I'm not really looking to hold this thing all the way back to 92. My break even's around 85, probably a little bit lower now because I did add in at the bottom. But I would say this is going to be my profit target right there. Between like 86 and 88, that's my profit target. And in order for me to add more to this, if anything, it would be we've got to have a run back up into these highs, maybe break a trend line, get like a 3-wave move, maybe a 5-wave if I'm going to get greedy. Otherwise, a 3-wave move is totally fine. So if I can get 86, 87, 88, 100 profit target with a break even at 84 or lower, I'm going to take the profit. Okay, and then dollar yen will be last. Dollar yen is I think just a mess. Watch this level, watch this level. Lots of resistance here around the 149, 150 handle. We have a major high at 162, a major floor at 140. This wouldn't surprise me if this ends up happening. I don't know if this becomes a break to the upside or we end up breaking and going lower. I said this before, just don't be I guess don't sit on the sidelines forever. If we're going to have a break below 140 to 120, I think is a great trade in the dollar yen. And I think it can happen. I have a feeling that the dollar's going to have to get set up for like a big multi-month sell-off. If we're going to break 140 and go to 120, then it's either the whole Japanese yen basket gets stronger or it's truly led by just a big dollar weakness move. And I'm not sure which is going to happen. So until this happens, I really don't care what the dollar yen does. This to me is noise. I'm not that interested in dollar yen. Okay. I'm interested in, can I sell this thing crazy high, get a great trade setup where my reward to risk is just monstrous. Okay. Or we break the floor at 140, stop loss above, give yourself a little bit of breathing room, and then it breaks, retest, goes, and just sells off, and you're looking at lower highs the whole time. Because in my opinion, if we go from 140 to 120, it's not going to be slow. We go from 140 to 120 probably pretty quickly, the same way we did here. Okay. If we break and go that way, it's like it's going to be fast. So that's why I'm willing to be patient and just ignore all this noise, because this is not what I want to trade. I'm not going to position for a negative swap and hold my breath if this thing gets to 120. I'd rather just let the market confirm it, let the volatility take off, and let it rip to 120. And I'm just participating with like maybe some days or weeks, like swing trades. Doesn't have to be months and months and months. Okay. All right. Let's see what else is going on today. Let's go DAX, gold, silver, Bitcoin. VIX, by the way, VIX is way down today. Let's see if I can get a 6,200 pin. 62. Okay, I'm going to try to get filled for 65 cents on a little butterfly spread. Give me filled at 60, please. Come on. Okay. Anyway, DAX off the lows a little bit. This is a 23% pullback. That's pretty shallow. We might go sideways. I don't see a 23% being the big level that's going to thrust this thing higher. So a sideways would maybe offer up an equal low to position for some more accumulation. Or we have a high, low, lower high, lower low, try to get into slightly deeper retracement level from the April low and then maybe like the 30 to 50% zone, that looks like a better trade to get back to highs or higher. So anyway, I'll keep an eye on DAX. FTSE, similar. I mean, this thing's rolling over a little bit. I'd like to see it pull back to at least like the 30% or 50%, buying the dip, trying to get back to the highs or higher. China, it's okay. Brazil, breaking some highs. Okay, we just cleared this high around 28.50. Let's see if Brazil just stays above the 200 moving average. Latin America, same thing. Cleared this recent high from May. That's good. I'm long on both of these. MAGS is up on the day. Probably the big contributor why the market is up as well. MAGS up 1.37, and you've got the S&P up, quarter 1%. But that's not a surprise. Like MAGS is up and it's dragging the markets with it because we only have like 40% of stocks making highs today or making green. If it's led by MAGS, that's big enough to get a positive move. So MAGS up on the day. Apple's had a pretty good couple of days. Apple back up to 212. Amazon up to some decent highs at 220. Still a long ways to go to all-time highs. I still like buying dips on Amazon. I got a ton of ratio spreads down here off these April lows. Broadcom, I put in a little bear call spread here, trying to keep this thing below 265 by the July 18th expiration. Google, a lot of volatility, but my ratio spreads are below 150. I've got like some 135s, 105s. I sold a lot of premium on Google. I'll try to stay out of the way. Meta pulled back at the highs. That's fine. If we pull back to like equilibrium, that'd be great. I don't know if I'm going to get it. I'd like to say I'm going to get a trade on Meta that I can reposition for. This is probably one of the few MAG7 stocks that is like Microsoft and Meta, probably two of the bigger players in the AI space right now, as far as MAG7 making that big transition into AI. I think that's going to be, two big players will be Meta and Microsoft. Netflix, a little bit off the highs, overbought conditions with inversions. I expect to pull back here. I just don't know how severe. Nvidia, we did breach all-time highs at 153. We're higher. We obviously have some overbought conditions. A little bit of topping would be fine. This was a kind of an inefficient, like blow-off move. A pullback to 140 and change, a pullback into the 130s. I mean, to me, look at this as a potential bullish pattern, right? This level, if we get our low to high and we pull back to like 23 to 30%, 38%, great spot to position for, get back to the highs and go higher. Maybe. If it's just a big range trade, okay, fine. But I would sell tons. I've got naked puts at $70 on Nvidia that I will keep. Tesla, a lot of volatility here. Gap down, gapped up today. We're up to 315. I sold some premium yesterday. I rolled some calls out to August. I'm going to keep rolling calls and just collecting some income. Berkshire, I wanted to place a trade off this 200 moving average, but I'm going to hold off on that for right now. Bonds gapping lower. I sold a 89 call yesterday out to, let me check my expiration here. TLT, I added an 89 for July 18th. So this is now, let me group this together. This is going to be a diagonal. So I've got a 65 by 89. It's up a little bit of profit, but I'm just trying to get it called away. If I get the 89 strike called away, it's going to be about $13,000 in TLT profit. So I'm, selling premium. I'm actively lowering my debit against the diagonal spread. So let's see what happens. But a gap lower doesn't help. Let's see what happened to yields. The 10-year yield up, 20-year yield up, 30-year yield up. Is this in anticipation of this tax bill? Maybe. We'll see. I mean, the Fed stuff's not going to happen until September, October, December. That's if the Fed cuts 3 times this year. We have inflation data not next week, but the week after. So this week is all about non-farm, which is tomorrow. Next week is kind of nothing. The week after, we have inflation data, plus we're kicking off earnings season once again. Okay, yep, let's go gold and silver. And then I'll let you go here in a couple minutes. Gold is holding nicely around that 3260 handle. I still think gold is at best range bound. I don't think we're breaking highs on gold. Okay, it doesn't mean I'm short. Okay, it means that if we break highs, that's like the pleasant surprise. But I think that because of this bar count, because of the way that gold has been in a multi-year bull market, I think this is at best an accumulation phase. So if you can find some equal lows here, that's a great spot to be adding positions to gold, adding exposure, adding more options trades, and then look till we get back to the highs and break higher. Eventually, we probably will. The other way this play works is maybe we have resistance here, and this market makes higher lows. Well, that's an ascending wedge, and that to me is still a bullish pattern, right? Some people look at that like, oh, Chris, it's not a rising wedge. Rising wedge is we're going higher and higher, and that pinches and it's so exhausted that it corrects. An ascending wedge is we have a ceiling and the market is kind of building its way up to break that ceiling. Okay. So there's still a lot of good structural evidence that gold is still going to head higher. I just want to see if we can pull back to equal lows first. I'd like a little bit more consolidation if possible. Consolidation, add some more exposure, plan for the highs and beyond. If gold can make new highs, I think silver is going to go with it and possibly outperform. I think silver is a better trade with more room to run. Silver's hanging nicely at 36. I think 36 is fine. We hold here at like 35. We hold even at 34 and change. My big target on this one is going to be 41. If we get to 41 or greater, I think we run to 48, 49, $50 pretty fast. Okay. It's my decision to figure out like, what do I do at $48? Probably take some profit, number one, but number two, it's like put in trailing stop losses just in case it's going to be like a runner that just keeps going. So probably trailing stop losses before I just dump positions, but I don't have anything covered on silver. I'm just running with shares and I've been adding exposure, all these consolidation periods, adding in trades on silver futures, adding in trades on SLV. And hopefully we will continue to see, this run to 48 plus. SLV, I've got it measured, trying to get this up to 44. Look back at all-time highs in SLV. All-time highs around $48. So can we get there? That would be an awesome run of 40+%. If SLV can hit all-time highs, that's a 40+% move. For a metal, that's pretty darn good if you ask me. Okay. All right. Bitcoin at 108. Getting a little run on Bitcoin. MicroStrategy's up to 382. Coinbase continues to run hot. From this rip here, this is like a 70 or 80% move. That was crazy, actually. 160% since March. Wow. A lot of that was on the stablecoin announcement. That was this. So stablecoin, the Genius bill, or whatever the heck they're calling it, from 246 up. I sold a lot of premium on Coinbase at the 150 handle. Made some good income, but what a run on the stock. Pretty impressive. So anyway, copper running hot. This is a good sign too. You got old Dr. Copper looking like things are good in the global economy. Freeport McMoran is FCX. Oops, FCX up. So we got some naked puts on this one that are just going to take time, but should be hitting expiration by the end of the year. FCX exposure there. Lots of naked puts up about $1,000 and hopefully more to go. So max profit here would be around 375. We'll go 350 times 4. Yeah, I'm up most of the profit. 350 times 4, about $1,400. So if this gets up into 90+% of max credit, I'll probably just take the profit. So, all right, everybody, I do have to run. Like I said, hard stop at 11 o'clock for me. Let's see what the market gives us for the remainder of the day. Non-farm payroll tomorrow, 8:30 a.m. Job numbers are not looking like awesome. 111 is expected. If it stays there, that's fine. But watch the unemployment rate, watch the claims, watch the continued jobless claims as well. Those comes out on Thursday. I think that's the numbers we'll kind of digest tomorrow. Comes out in the morning. Markets are closed at 1 p.m. So we've got limited trading hours tomorrow. Just be careful. It could be a volatile day. And then we'll come into kind of kick off inflation in a couple weeks and earnings season in a couple weeks. And we'll see what July volatility looks like. So, all right, I'll wrap it up there for today. Thanks a lot. And let's come back and do this tomorrow morning. All right, thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.